Hello and welcome back to the Costing and Pricing Learning Program. My name is David Gilchrist and it's my pleasure to present Webinar 7, Costing and Pricing under the NDIS. Before I get into the major part of the webinar, I will go through the normal warnings and indications, and firstly, of course, there's the copyright. So if you're looking to use these materials either commercially or for free, in any way, shape or form, it's important that you go back to Webinar 1 or to the study guide and just investigate the copyright requirements that are inherent in all of these materials. The second thing I would say is that, of course, the navigation and the other materials are really important when you're considering the content of this webinar. All of our webinars are designed really to give the listener a taste of the particular topic. We're cutting down and looking at very, very specific topics and looking at those topics in a fairly quick format under the webinars. So you need to go back to the study guide, to the costing and pricing framework, to the seminars and other materials that are available on the Costing and Pricing Learning Program website. So make yourself familiar with those as well. Secondly, each of the slides, where useful, have navigation markers attached to them, directing you to particular parts of those materials. So avail yourself of those navigation guides and make sure that you understand and look at the broader context of the material, the deeper discussion that's available in the study guide particularly. The previous webinar to this one, Webinar 6, you'll recall, was Control in a Costing and Pricing Environment. This webinar, of course, we're looking at Costing and Pricing under the NDIS, as I mentioned. And just for completeness, the next webinar is Webinar 8, Managing the Target Price Gap. Okay, let's have a look at NDIS and Costing and Pricing. I guess the first thing to really emphasize in terms of this particular topic is that NDIS and costing and pricing is no different to costing and pricing in relation to any other service that you might provide in your organization. So while the NDIS was certainly the catalyst for a lot of work around costing and pricing, particularly the Costing and Pricing Learning Program that we're into today, the NDIS is really just a function of how resources are rationed to disability service organisations. And therefore, costing and pricing under the NDIS is exactly the same, or in principle, as costing and pricing in terms of any other aspect of your operations as a disability service provider, or indeed as a broader human services provider in general. Having said that, of course, there are some complications as well. The first complication is that most disability service providers, not all, would be exposed, if you like, to the NDIS much more greatly than to other funders. And so the NDIS model, the way it is rolled out and the way it impacts your organisation is, of course, going to have a material impact on your ability to pursue your mission. It will also have a material impact on how you cost and price. And so while it is, in one sense, fairly germane costing and pricing, it is also true to say that the NDIS model is going to impact the way you make decisions broadly under your costing and pricing regime. In this webinar, we're going to look at some of the considerations of how the NDIS is put together in terms of what kinds of things might affect how you cost and price under that regime. We'll have a look at some costing strategies and also some governance issues, but remembering broadly that this topic is focused on NDIS solely, but takes into account all of the other discussions that have been had in the webinars leading up to this point, and is relevant. It is also relevant to consider future webinars, and as I mentioned before, the Costing and Pricing Learning Program Study Guide and the National Costing and Pricing Framework. I guess the first element that's really important is to understand what the products are from an NDIS perspective. So when we cost and price, as we all know at this point, understanding what your units of measurement are, in other words, what each product is or each type of service, is critical to be able to undertake a costing and pricing process under the ABC arrangements. Therefore, one of the first things that you will need to do is to actually map your services to those services that are listed as available under the NDIS to work out, A, what level of costing you need to undertake, and B, what kinds of services or how those services articulate to the NDIS menu, if you like. Importantly, though, as I said before, there's no difference in costing and pricing outside of the NDS as opposed to within it. So we use the same sorts of techniques and processes. Let's have a look at some of the elements that are making up the NDIA price guide. So you'll all recall that the NDIS is actually operated by the National Disability Insurance Agency, the NDIA, and the NDIA puts out a price guide which is structured into 4 levels each year. Levels 1, 2, 3 and 4. Level 1 is the support purpose, and there are essentially 3 types of support purpose within the price guide. They are the core, capacity building and capital. There's also an outcome domain, a category, so 14 support categories in the NDIA price guide, and level 4, the support items, comprising about 110 unique line items, each with its own price. This level of granularity is very fine, but it is a level of costing that can be undertaken by your organisation. The actual pricing structure in the NDIS is arranged as per this slide, but this is also subject to change year on year. And so this is one of the complexities of working with a significant part of your funding coming from one entity, because that NDIS price guide is likely to change both in terms of its levels and obviously in terms of its amounts as time goes on. It may well change minutely or substantially in terms of its structure as well, but obviously that is something that can only be dealt with as time rolls on, and your function as costing and prices in this regime is to try to maintain as much flexibility in that context and be true, if you like, to the service, to the ABC costing principles that have already been discussed. The above listing, or rather the listing in relation to this slide, is really a hierarchy. Support items are the most granular unit of detail, and they're grouped into those clusters with the providers indicating which clusters they plan to supply. So not only do you need to be familiar with this NDIS price guide, but you also need to work out what elements in that price guide you want to provide as an organisation. That mapping exercise I talked about before, of mapping your current services to that price guide, is pretty critical to building that particular understanding. The full price list is available from the NDIS website, and I guess just for those people who have a technical bent, you need also to be aware that it comes in a CSV, so that's a comma separated values format, which allows you to input it directly into databases. So where you have a complex client management system, or you have that technological capacity, you can directly enter that price guide into your database, which will of course help you with your management structure, if not with your costing and pricing process itself. Each support item is allocated a unique support item number, which is used on plans and when billing the NDIA. The unit of measurement allows for the correct billing method, and then the pricing, either by quote or from the list price, must also be provided. So each support item is characterised in the following terms, as you can see on the slide: a part number, a unit of measure, which is the type of, which is actually where we cost and price, the level that we cost and price, and then of course the maximum price and whether you need to allocate a quote. Our real interest is in that unit of measure, because that is what attracts the price and the level of granularity that we need to cost to in order to understand that target price gap, which is of course what we're always trying to identify in order to be able to determine whether or not our costing and pricing arrangements are going to ensure our financial sustainability into the future. There are of course impacts by multiple funding regimes, and costing is always impacted by the fact that organisations probably get the bulk of their funds from disability services providers. So in the current regime it may be a state provider, or you may be involved in a trial site for the NDIS. However, there will also be other sources of income that come into this consideration. One of the things that might be an important decision for you once you've mapped your services to the NDIS price list you will then need to determine whether or not you should change the names of your services to meet that price list, or whether there are substantial or even majority differences in other service providers, or rather other funding arrangements that you have in place. So one of the things that you need to determine fairly smartly is whether the NDIS constitutes a materially significant proportion of your funding. If it does, it may be wise to then recut your costing and pricing and your identification of services to the NDIS price guide. If it isn't a substantial element of your funding, then it may be best to leave your description of your services the way they are, or to signal other ways of looking at those services. Remember though that mapping to the NDIS is really critical so that you can understand at least what services attract what prices. Most organisations, as I said, do have to deal with multiple funders though, and that shouldn't really affect costing to a degree. So one of the key things that I mentioned in webinar 2 in relation to just introduction to costing and pricing is that you need to remember always to cost within your organisation equitably, fairly, and consistently between all of the types of services that you provide, regardless of what the funder's business rules are at the time. And this is a really important conception, I think, that you need to take an internal view of costing and pricing and then compare that with the funding arrangements that are in place, as opposed to trying to cost and price to the funder each time. I guess another way to put that is, instead of simply accounting to the funder's requirements, you need to account and cost according to your requirements and then compare that to what the funders are offering. The reality is, though, that the NDIS may change the way you look at your services. It may also change the services that you're looking to deliver and therefore the costs of those services. It might increase reporting or other requirements, and it also might have staffing impacts for you as well. This can also add difficulty to costing and servicing, to the costing by service delivered. So remember though, don't sweat the small stuff. Look at the 80% and remember the cost-benefit rule that was introduced in webinar 2 in relation to the fact that costing and pricing does cost money to implement, and therefore you need to think about what the practical and material benefit is of costing to the NDIS price schedule. There are also, I guess, some pricing strategies that need to be taken into consideration in relation to NDIS, particularly for those organisations currently enjoying some form of block funding for particular services or particular situations. It may be, or it seems to be fairly likely now, that block grants will be minimised or eliminated in the NDIS. Now, we still don't know fully what's going to happen in relation to those kinds of elements. However, we are fairly sure that they will be minimised, that the opportunity for block grants is going to be reduced. Payments also occur after the fact, and so the NDIS, like any other costing and pricing regime, needs to take into account the costs of working capital for your organisation. So how much does it cost actually to be able to provide services in advance of receiving your price, and how much does it cost for you to take out loans or other financing arrangements to be able to ensure you have working capital until you are actually paid for the service delivered. The other thing that's really critical to be thinking about is, notwithstanding the payments are made now after the fact, the other critical element is looking at your activity levels and making sure those activities are actually undertaken as soon as possible in the financial year. In other words, the idea of balancing your activities and looking at a target of activities that are needed at the end of the financial year for block funding or that kind of older funding regime now needs to be reconsidered, and we need to have activity undertaken on a uniform basis each day to make sure that each day's costs are recovered as a result of the activity that you've undertaken. That activity timing is absolutely critical. The final point that I'd make just in relation to this slide is, of course, as per, again, costing and pricing more generally, under the NDIS, the aggregate of all activity and all prices is the most important aspect. So you may have some aspects of NDIS services that you deliver that don't recover their full costs, but you might, if you like, intellectually decide to continue to deliver those services at that less than attractive price because other services you provide are able to ensure that all of your costs are recovered. It is at the aggregate level that we look at sustainability and that we're concerned about ensuring that all of our costs are covered. Of course, having said that, we do come back to each individual service because the only way we can ensure at the aggregate level that we recover all of our costs is by ensuring that as many of those activities that we undertake recover their costs and also provide a profit to the organisation. There's some everyday issues that need to be thought through, there's some governance issues that need to be thought through as well in relation to NDIS and costing and pricing. Firstly, some everyday issues. By and large, as I mentioned before, the issues covered in Webinar 6, control in costing and pricing, are the same issues covered here. So costing and pricing in terms of control and governance for the NDIS is exactly the same as costing and pricing for control in any other environment or as a result of any other funding that's provided. There's no difference between costing and pricing outside of the NDIS and within it. And again, this is probably being overemphasised, but a really important aspect of NDIS is that there is no difference between costing and pricing under this regime and other regimes. However, it will have a significant impact on the organisation, and a particular focus must be that we're always careful only provide those services which are able to provide a financial return to the organisation, or which intellectually we've decided to provide as a result of the mission that we have in our organisation. So one of the things that's critical about costing and pricing in terms of governance issues is that we really do understand which services are costing us money to provide, and that our board, CEO, CFO and others within the organisation are taking, if you like, the intellectual decision to continue to support those items in the knowledge that other items that are sold are able to be recover the costs associated with those service deliveries. So choosing the services to provide requires you to think about what areas you're competent in, what evidence-based assistance to consumers you can identify, and perhaps most importantly, the service mix is fairly critical as well. So while you might provide services that are not recovering funds, it is critical that you look not only at the types of services you provide, but the aggregate level of those activities to ensure that that is affordable. You also need to think about some of the peripheral activities that are critical to ensuring that you are able to provide a holistic service to your clients. And one aspect of providing those periphery activities, if you like, is creating some close links with other service providers that might be better at doing some of the services that you're not so good at doing. Better includes not just in terms of quality, but also in terms of efficiency. Often under a regime like the NDIS and in costing and pricing terms generally, we tend to say sticking to the knitting is a much better proposition for financial sustainability into the future than trying to be all things to all people. So it is fairly critical, again, that you map your services to the NDIS and confirm those services that you want to continue to provide, as opposed to identifying those services that you might think need to be allocated to a closely aligned collaborative organisation that you can feel comfortable in servicing your clients, or that you can recommend to your clients and allow them to undertake that choice. Some other additional costs that need to be taken into account under the NDIS type environment include things like marketing consideration, exiting service lines, perhaps in some ways walking away from consumers, and I'll come back to that shortly, and also finally exiting the business of disability services. In terms of marketing considerations, we're not going to talk about marketing specifically here because this is a costing and pricing topic rather than a marketing topic. However, there are considerations around how you construct your types of services that you provide from a market perspective, and also from the point of view of making sure that you have a seamless and efficient service being provided to your clients. The other considerations from a costing and pricing perspective are that there may well be additional overhead costs associated with operating your organisation as a result of a need to increase connections into different elements of the market than you might have up to date. So many organisations around Australia have traditionally had strong links with their disability service funder. So state government agency may have had strong links with organisations like NDS's peak body and other peak bodies that are associated with disability services, but typically, for instance, haven't had a broader connection with the community in a marketing sense. That may be necessary, it may not be necessary, but the costs associated with that certainly need to be costed into these elements. The second element that's very important is that I've said right the way through this webinar that it's really important when we cost and price under the NDIS, as incidentally it is more broadly in terms of all of our services, that we actually look at and map our services to the NDIA price guide. Once you've done that, it is important also to look at the service lines that you want to retain in your organisation, as per my previous comments, and those service lines that you might want to walk away from. Under block funding regimes or traditional disability services funding regimes, service lines can be lost, if you like, in the amalgam of all of the things that you do. And it might be, as a result of undertaking costing and pricing in this exercise, that you actually decide that some service lines aren't worth pursuing because A, they're not germane to your mission, B, you may not be able to do them as efficiently or as effectively as other organisations, so sticking to the knitting, and C, they may simply be too costly. So while you can take an intellectual decision to continue to undertake services that might cost the organisation because at the aggregate level you feel comfortable that you're financially sustainable, some service lines need to be jettisoned because you need to draw a line in the sand in terms of what the true cost of service delivery is for those lines. That's, I guess, similar in a sense to walking away from some types of consumers if you feel that that is the most important aspect for the sustainability of your mission and the sustainability of the finances of your organisation. And then finally, it's entirely valid for organisations under this type of regime to decide to exit the business of providing disability services. Now that might be that you are an organisation that undertakes a whole lot of other human services and disability services simply is a periphery of your activities, or it might be that you're an organisation that is in a position where it doesn't have the capacity to cost and price in the way it needs to in order to be able to be financially sustainable under an NDIS type regime. If any of those things apply, then exiting the business is a valid option for you, for your organisation, and it may be the best way to ensure continuity of service for your clients, because you can exit the business in a very organised and efficient manner, in a controlled manner, rather than waiting until you are in financial difficulty before you exit disability services. The other governance issues, of course, to consider, as with costing and pricing more generally, include the reporting requirements, both for your board and for your senior staff. Some of those reporting requirements are fairly straightforward, but an emphasis on activity levels and timing of activities is really important in NDIS costing and pricing, as it is more broadly. So in other words, traditionally boards are very used to receiving monthly sets of accounts, looking at budgets versus actual and looking at the variations in those outcomes. However, it's less likely that boards are used to receiving reports denoting the activity levels for each line item or each unit of measurement as compared to the expected activities for levels for a particular period. It's fairly critical that boards and others within your organisation actually have an understanding of those elements. Of course, all of the other elements apply that have applied in our broader costing and pricing discussions up to this point in time. The key decision points relative to relevant range, activity levels, and also how to respond to cost blowouts are all critical elements of governance. One of the key things that's really important to remember is that costing and pricing is a continual process. You never complete it. You certainly don't do it at the start of the financial year like you might a budget and then set it aside. You continually revisit the cost that actually turns out, the activity levels, and more importantly, in relation to both of those two things, the timing of that activity to make sure that you are able to invoice NDIS on a timely basis for activities undertaken to recover your costs and to reduce your working capital costs associated with not getting paid upfront or in advance. Part of the costing and pricing governance issues that you need to think about, of course, include the board reporting and board engagement in this process. And one of the things that might be necessary is for you to provide more information to the board than they might normally need in order for them to understand things like how the NDIS is structured, what their price list is, and importantly, probably mapping your services to that NDIS price list and sharing that with the board so that they can see how your organisation articulates with the NDIS system. That's it for this webinar. The next webinar looks at managing the target price gap, that issue that we continually return to in all of these webinars, and I think I look forward to seeing you there. In the meantime, we are very happy to get any comments or questions, to have any communications with anyone that has any queries in relation to any of the material in this webinar, all of the webinars up to this point, or indeed the broader costing and pricing learning program and the materials available there. Don't hesitate to get into contact. Thanks very much, and I look forward to talking to you soon.